Your life, your term show.
All right, Zhen, thanks for making the trip, man. Appreciate it.
For sure.
So, I don't know, to give everyone, when did we first cross paths?
Oh, I want to say 2015.
That long ago? Everything's like, I feel like I've been doing this too long.
You have, I am a dinosaur in this, and you guys have been at this longer than I have. Yeah. So you're like prehistoric.
Dinosaur. Yeah, that's I think officially the first time someone called me a dinosaur. I must be getting up there.
You're a good looking, young looking dinosaur, so it's good.
Oh man. Yeah. But no, it's been cool. I mean, and different journeys, and just to give everyone context, just to, so everyone has an idea, give the kind of the 31-minute kind of lowdown of kind of what you're up to, kind of where you came from, that type of stuff.
Got into real estate accidentally. No one decides it's their first career. No one does. And then
you're right.
I was doing like a bunch of real estate investment, and we're doing commercial real estate, and we're buying and selling and assembling stuff in Yorkville. And I was like, oh, I can't do this. It's like golf tied up collared shirts and ties, thinking that's what I wanted to do because I wanted to fit in with my friends who are just like consultants. And I knew I didn't want to do that. And then I think...
How old were you when you were doing that?
24, 25. Like pretty young, like analyst level, just doing all the grunt work, all the geo warehouse, assembling, like doing all the numbers.
But those are the years that when you first get into that, it seems like it's like that would be... you're in Yorkville, you're in that cool area, you're doing cool stuff. Like, it just seems like that's, seems like a good idea. Like, I'll never forget my first corporate job, one of my first corporate jobs. I guess first it was public. I was at the Region Appeal. Then when I was at Oracle, I had a business trip and I had to go to Chicago to meet some clients because I was able to get through to some clients that the field rep there couldn't get through to. So they're like, you have to come down. So you have to go with the field rep to meet them. And I was like, oh yeah, I'm going on a business trip to Chicago. Like, I'm pretty cool. I'm really excited about this. This is going to be so cool. And immediately I hated it. I'm like, this sucks. Well, this is what I thought would be cool. This is what I thought I wanted. And after that trip, I was like, okay, I never want to do this again. I totally interrupted you.
That's exactly it, right? Like, I thought it was cool. Everyone's doing these like business trips. We're all talking about it. You got your per diem. You don't spend it. You can pocket it. And I was like, this is not that great. This is really not that great. So then, we're trying to, is that okay?
Oh yeah, no, I was just checking the time.
I see. Yeah, so we're like, then I was like, oh, how do I, not work like this? And I was like, went on the passive income route, all the usual things. And I eventually got into investing, and then I was like going through, I'm like, let's learn more. And I'm pretty confident I was going down to like the whole, like listening to everybody's podcast kind of thing. And I ran into Irwin's, and I came into Rockstar, and I walked in, I'm like, oh, these guys got a pretty cool kind of setup. And then I joined as a member. And then shortly after, I think I was talking to Tom, and I was like, okay, whatever you guys are doing is super cool. It's kind of totally my vibe. I love this. And that's kind of sad I kind of left, but I joined, and then that's how I was part of Rockstar. But then it was just because I think it was I left because you guys weren't doing condos at the time.
We really weren't doing much. We never did get into pre-con in any big way. And we were talking earlier. I mean, there's a lot of things in your youth that I think, you remember lessons, and, for better or for worse, they impact you in some way, right? Mm-hmm. Everyone's got some barriers because of them. And I remember those condos on Webb Drive in Mississauga that we were talking about earlier, when the market downturned, or in the early 90s, man, they were hit hard, and they didn't come back for a long time, because those were some of the first units I was looking at for my first investment property. And that would have been years after they kind of peaked and then valleyed as well. And I was still looking at them years later, and they still hadn't kind of come back. And I think if we just kind of remember that combined with our parents, the cash flow component, where we realized that we had this high-end property and our parents got kind of stuck holding the bag when the prices changed, and we couldn't rent it out for cash flow. So they were in a negative cash flow situation. We just really didn't jump on that bandwagon. And we missed out. There was a lot of appreciation that we missed out on 100%, because we didn't really see, at that time, we didn't understand just the way that the city was transforming, and that the condo was really the new apartment stock of Toronto, basically. Yeah, and we kind of missed out on that stuff because we were focused on what we were doing. But you can't, in every industry, you can't be all things. You can't, if you have something that's working, there was value to focusing on that too.
100%.
So, but because I think then you moved on, and I think that allowed you, to get different access to some of those
construction. Yeah. At the time, it looked like it was really cool. You were hyping up projects, and at the time, like bad thinking on my side. I was like, yeah, this all made sense because I was projecting very conservatively, like the rents when it's finished all made total sense. And it was still great up until I believe 2018. And I distinctly remember because like in entertainment district where we're doing a lot of selling condos, and I lived down there in downtown for a while, I remember which club became the condos, right? So I very distinctly, like the one I always keep telling my clients, I'm like, this is London. This is London.
I drove by that I don't know when it was, maybe it could have been a year or two ago, but I remember that.
Yeah.
And I thought the exact same thing. Yeah.
So I remember it. So I remember all the condos. And there was one project that was at about $1,000 a foot. And it was in 2017, late that year. And then I remember in 2019, they doubled development charges. So they basically passed it on to the buyers. And the building literally right across from it, like 4 units down across Blue Jays, sold for $1,300 a foot. So it went up 20%. I'm like, this just breaks all the math. And I stopped selling pre-cons at that point, which is very ironic because I was basically gone from Rockstar for like 6 months. And I was like, oh, the reason why I left, I'm like, I'm not doing there.
Did you really? Did you stop then? But did you start again at a later point?
I still like 1 or 2 because some clients really want to do like, hey, Zhen, do you have access? I'm like, I don't have direct access from the builder, but like I know somebody. I can maybe, call them. Maybe they can hook me up. And I've sold a couple like that when people are asking, but not really directly.
Yeah. Those pre-sale condo days when it really got, nutty, it reminded me of the days when our parents were flipping real estate, and that's before that last crash. And I think that's kind of why we had a little bit of PTSD, because our father was literally locking up a property from a builder, but at that time it wasn't like a fancy sales office. This is out in Mississauga, Credit View, Eglinton. I kind of remember the area, and it was basically a trailer in a gravel parking lot, and you would go into the trailer and you just buy it, and he would lock one up, and he literally came out of the trailer, was able to lock one up, and was able to flip it on the spot to someone. Right? Yeah. That's why when we saw this kind of access to pre-sale, or like it was platinum, and I don't know, there was all these different levels. It's like, man, this seems like this is getting a little bit out of hand with the level that it got to. But to be fair, the supply, there was definitely a bubble aspect to it, like a FOMO aspect. But at that period of time, the supply and demand dynamic in Toronto was really out of whack as well, right?
Yeah. But I think a lot of it had to do with back in 2015, when you buy pre-construction, they were actually lower than resale. So it was hey, you're buying these floor plans. It wasn't branded as you're buying a new car versus an old car, because that's like the pitch I always hear in people's like newsletters I get for like selling the projects. It was, hey, you're paying a discount to the resale and you're taking on the risk. And it made sense. And at that time, it was only like 5 to 10%. So it made a lot of sense. And then it was only when they introduced the assignment clause, I think it was in 2015 or 2016, that allowed for the speculative selling of the contract over and over again. So then you had a lot of builders started marketing, hey, free assignments, right? In air quotes. And you just pay $1,000 legal fee, and then you could sell that. And then you had people who put down 5%. They bought a condo for $300 at the last low phase. They sold it because the market went up, and they thought they were geniuses. But it's kind of the same thing when the market goes up. Did your renovations, make you look like a genius, or just the value of the land go up, or the market dragged it up, right? So when they sold them with 5% down on a 300, call it, 60 grand or so, and then they made $150,000 in a year or two, everyone tells everyone, it's like, let's get in.
Yeah. No, you're right to that point. Like you could basically, there was a period of time there, and this is in any area, you could buy any piece of real estate and you would look smart.
Oh yeah.
Right. Sure. We'll never forget. I think it was 21 into 22. We left for, in December for Christmas. We kind of took a break. We didn't have a team meeting for a while. We came back in December, had our first team meeting, and we're just looking at the prices of the properties. And we're like, guys, is it us, or is everything up like 75 grand in like a month? That, and that's right before that's actually the month that they decided not to raise rates.
That was crazy.
And everyone's looking around, they're like, what do you mean you're not raising rates? Like, you must, this is crazy. Even the people in real estate were like, are you crazy? What are you doing here? And then they finally did it afterwards. Like, it was just a mess, but things just went completely wild. And you could just see how, we had multiple investors that walked into sales offices, because now I've spoken to them. They're like, oh, well, I have these couple of condos, or I have a couple that I'm supposed to close on. And I'm like, oh, well, why'd you buy those ones? Where do they fit in? They're like, you know what? I just felt like I didn't have enough real estate. I panicked. We were walking by a sales office, so I walked in and bought 2. And I was like, yeah, that's not like, usually, usually that's not the best way, the best way to buy the investment properties,
But so much of it, I don't blame that person, because it's like they set it up economically like that. When you have negative real interest rates and you have the governor of Bank of Canada saying, we're going to keep interest rates low for a very long time. I remember 2021, it's like, I have so much cash. What do I do with it? It's just inflating away. It's becoming nothing. I got to put in something. NFTs, real estate, whatever. Everyone's just putting into something. And because we're flushed with like COVID cash, they're like, I couldn't find appliances. I couldn't find boats. Like nothing was available. So like everything just plowed into like investments.
I agree. I think and that's one thing that's not spoken about very often. Like a lot of people will look at the investors and be like, well, the greedy investor, they're the bad person. They're trying to do that. And I'm like, well, can you blame them? Like if they're just trying to do what's best, if they've figured out the way the financial system works, and they feel like their savings are going to be inflated away, like you said, and they're just trying to do what they feel is the best thing for their family to protect maybe so that they have something to leave their kids. Because if they just keep it in savings, if someone has $100,000 and they're going to keep it in savings for the next 20, 30 years, the purchasing power of that thing is going to be whittled away to nothing. Exactly. So they're just trying to, the incentive was there for them to do it, and they're just trying to protect their family. So like, are they really the greedy investor, or are they just like, hey, like I'm just trying to kind of survive here with everyone else?
Yeah. And like, I have a lot of people who like book calls from me after watching like my YouTube channel, and I listen to them. They tell me the story. And so much of it isn't greedy investors. Like, hey, it looked like a good idea. I was going to go this. Sometimes it's for my kids, or, I wanted a second property, eventually pass it on to my kid. And it all made rational logic sense in that time. It's just when you look back now, knowing what we know now, obviously it doesn't look great. But then you do have what I would say people who are upset, like the public people are upset, and I can see in the YouTube comments. The greedy investors would be people who come to me and said, hey, I have to, assign this pre-construction contract I bought for how many? And he's telling me, like, okay, that's what the case is. And then 20 minutes out of the conversation, he's like, so I have another one here and here and here. And then I'm just like, I see. I don't think I can help you with all of these. Yeah. And I think those are the people, whether the story was, true or not, I think maybe they bought into the mania, or maybe they were the greedy investors. So like, I kind of divide the investors between the speculators, because the investors are still looking at, call it cash flows, are driven by like fundamentals and everything. Whereas speculators like, oh, that looks like a good project, let's just buy it and I'll flip it. I have no intentions of ever closing on it. And then, you get into the whole like fake mortgage document. I wasn't going to close on this anyways, all that stuff. So I'm like, that is the, quote unquote greedy investor / investor.
Yeah, I'm glad you said that because I think that's a really valid point that a lot of people don't bring up. They lump everyone into one. And I think because historically we focused on cash flow so much, and the vast majority of the investors that we've ever worked with have also done that. When I hear those two lumped together, sometimes I'm like, it's not the same thing. It's really not.
And because I learned from you guys with like cash flows, right? I remember, I think Tom was telling me the story about your parents, right? I'm like, okay, cash flow. So when we were projecting out the pre-construction projects, like an entertainment district, it was like $1,000 a foot. Rents were at like $3.50 at like 4% interest rates. And I was like, okay, maybe they will go up to $3.75 and $4 and you'll just break even. But then the minute it became $1,000 a foot to like $1,300 a foot, I'm like, this makes no sense. You're gonna be cash flowing like $600 a month. And I was telling people like, don't buy it. But do you know what happens? They go behind my back and they just find someone else to sell it to them, because the narrative that I tell them, which from my perspective, I think is true, right? And I maybe talk myself out of sell, but fundamentally and from principles and values, I think this is what you should do. But they didn't agree with that, and that's fine. So they bought into the narrative and they found someone else and they bought it. And then a few times actually they came back like, hey, Zhen, I actually bought this. Can you help me sell it later? Yeah. And like you sometimes just like those people, they sometimes just, they bought into the hype sometimes. They just can't help it, right? And but you want to help them. But
you stay true to, like you said, you talked them out of a sale according to like a sale for you. But you know what? You stay true to your principles, right? And if you truly didn't believe it and you were doing that, in your opinion, was like the best thing to do, then that's the best thing to do. To me, it doesn't matter. And if they decide to go and they want to talk to someone else and that person believes that to buy it is the best thing to do, well, then so be it. And it's different if like that other person truly believed that, because maybe they did.
Maybe they,
right?
yeah.
But there's a lot of people, and this applies to every industry. I'm not going to pick on just the real estate industry, but it really does. But there's a lot of people that chase commissions.
100%.
They just chase a paycheck, and it makes every flipping industry look bad.
Yeah.
No different than you were just talking about the difference between investors and speculators.
Yeah.
And the speculators are just chasing the money,
quick money
for the most part, right? Versus the guy that's like, hey, you know what? If I manage to scrape up enough cash, buy a second property, if I can rent it out for a bit, maybe it's a property for my kids in the future, and that sets them up. You know, those are two very different stories.
Totally.
Versus somebody trying to lock up properties in 10 different locations in Toronto and just try to flip them and cash out 50 grand of each one, right?
Yeah, and I see a lot of it too, because I think right now when the market is, I would say, a pros market, because if you got licensed and you're not like a dinosaur like us, you haven't been through all the crazy things like we saw 2017, you guys saw the 90s, there was like COVID. If you haven't seen that stuff and you were licensed in 2021, none of this makes any sense to you. So I'm getting people calling me and they're like, hey, can you help me sell this? And sometimes I go into these places, I'm like, you're renting out 7 rooms right now, and I'm like, how do you sustain it? It's like I have to keep cycling the people over and over again. So I see a lot of that kind of properties. I'm like, I can't sell this for you. I'm like, 1, you have a huge LTV problem right here on your hands. 2, you can't get all of these people to be gone right away. And thirdly, this place just looked like a complete dump. It's worse than a student rental like that no one has taken care of. So I'm seeing a lot of that stuff where I think there were a lot of people in our industry just selling the dream, and unfortunately, this quick buck has turned into a lot of people with like really unfortunate situations, and like even if they believe them and we try to help them out of it, like it's sometimes you just can't reverse that damage. Right?
Yeah, and it's why when we were like, you know, we were talking about this earlier as well, that, you know, we're seeing more of the more sophisticated investors going back into Toronto, because for a while those numbers didn't make sense. Now you could if you started turning them to rooming houses and that type of stuff, whatever, but for a while, it's not that no Toronto numbers made sense. It's just that it was harder to find an income property in Toronto that made sense versus some other, you know, the ROIs or, you know, cash on cash returns you could get in other areas. But now you're seeing people, because of the change of the zoning changes and the higher as of right numbers, they're going back in and they're able to kind of really look at projects that are actually looking pretty good all of a sudden. But you're right, it's a more sophisticated person that has to go in to complete that project. And whether they're subdividing or they're putting lots together or whatever they're doing, or just even knocking down, redeveloping, it's a bigger task for sure.
It's a much bigger task. I remember like going from buying single family homes and renting it, and then to like converting them to legal to units. I'm like, that ordeal was a big jump, and understanding all the zoning bylaws and all that stuff, right? And then now we're talking about, okay, we're going to turn this home into 4. We're going to build a garden suite. Yeah. We're going to separate it so that we get different development charges. And it's just a whole different thing. So it's not that it's not feasible. It's you have to be an expert. You have to know what you're doing. And you have to have like people by your side who actually have done this before. And
you got to be prepared for the hiccups.
Oh,
anytime you're doing something like that, it's just never going to go according to plan.
No. So but this is kind of like, is it even possible for the average person to be investing in real estate right now if it's like that complicated?
Yeah, on those types of projects, there are simpler ways, simpler things. There are other things that are starting to make more sense again with the numbers. We're seeing for a while now, we've seen the student rentals have still been really strong. And I don't mean the student rentals by like, some little random college that opened a remote, like a remote campus someplace, like that no one really actually goes to. But like the major universities, that have kind of have their enrollment that really hasn't gone anywhere. Some of the universities really didn't have a huge influx of international students either. At one point, this is probably a couple of years old now, so it could have changed since then. But I was looking at the Western numbers, and the increase of international students at Western compared to what they had historically was pretty small. So they weren't dependent on all these kind of students coming in, and that wasn't running their school. So we just saw things like that. But then there are the other places, like there's like the Fanshawe colleges, Niagara, those places that just that just hiked their enrollment like crazy amounts, and just kind of those ones. Yeah, you could be in some trouble.
What's a bedroom in Western now?
1,100 to 1,300.
11?
Yeah.
Holy
13's high. 13's on the high end, but these are like purpose-built. We've seen higher than 13, like 1350, but these are like purpose-built properties that are, so if it's 5 or 6 bedrooms, whatever the number is, each bedroom has its own ensuite as well.
Okay.
So they're done well. Like one of the set of pictures I saw in the kitchen, there was like a waterfall countertop in the kitchen.
Oh, fancy.
Yeah. So it's not like, the traditional student rental that you would have in your head. Like they're nice properties. Everyone's kind of living
Like designed for students, basically.
Yeah.
Like double dishwasher, double fridge.
Totally.
and
That type of stuff.
Yeah, okay. Yeah.
So it's working out, but so it's cost more for those units. But I mean, the numbers make sense.
And there is something about students. I remember you guys telling me like way back. They're like, there's something about if the economy is bad, people go back to school, and there's always a demand. And then if things are good, you always have the backup on the guarantors of the parents. So like and on top of that, you also get the turnover, because we have like tenants have been with us for like 10 years. I'm like, can you guys leave?
Yeah, no, it's one of the upside. The turnover is nice, right? Because they're usually there 2 years, 2 to 3 years at the most, right? Yeah. So like they come in year 2, because typically
you get your res.
Yeah. So then they come year 2, they find a group of friends, usually the last 2 years. And often after the 2 years, I wouldn't say often, maybe it's 50-50. 60-40, I'm not sure. But anyways, some programs, some people start doing a placement here, so they're not coming back to school in September. So it's different things. So the group kind of falls apart. So what we've seen is the group kind of falls apart, but for the most part, the few people that leave, that group will backfill, because they want to be in charge of who they live with.
Of course.
Right? So they'll backfill and then they stay. So most of the time we're getting 3 years. And then after 3 years, that whole group leaves and you get another group, and then you can adjust the rents accordingly.
And I think if I had to measure the complexity and how hard certain like investment strategies are right now, outside of the things that don't make any sense, if you want to be cash flow positive, I would actually say student rentals make a lot of sense. It's easy.
It's pretty straightforward.
Yeah, it's pretty.
You know what? You just got to manage them right. Yeah. If you don't manage them right, then you can kind of get yourself into a little bit of trouble. Because some people will do things a different way, but you have to be on it. Like these kids, when they're looking for these properties in these university towns, it used to be early January. Like early January for us was like, as soon as they're back to school, that's when we're really average. We got to fill it then, because that's when everyone's looking. It's now, then it moved up to kind of like early December. Now there's some kids looking in November, because they know they have like another sibling that went to school already. They lost out, so they're trying to get ahead of it. Right. So it's like, and they're signing in like November and December for the following May.
Holy cow.
Is how they're doing it. So, but you have to kind of be on that, because if you're someone that's like, well, I'm just going to wait till May and see what happens with these other kids, and these other kids are like, hey, we're gone. And then in May, no kids are looking for properties. You're kind of looking around like, oh, this is now, what do I do for the next few months? So you kind of have to, and there's other kind of things you got to manage properly too. But that's how it's been for our experience.
I think it makes total sense. Total sense for where we are currently in this market. If you're an investor and you're after cash flow, student rentals make a lot of sense. If you're
looking for something, yeah. The best ones that we've had are the ones that are close to, there's a couple that we have in Hamilton, both on the mountain and down. So by Mac and Mohawk, because they're close to a school and they're close to a hospital.
Yeah, the hospital is always good.
So it gives you options, right?
We have stuff in Durham and close to the hospitals. Great. Just like tons of nurses. They're the best tenants.
Yeah. What about your, in that Toronto market, in that Toronto condo market that you're seeing right now? So then you stopped playing in that space, but you still have people calling you from your YouTube videos and stuff?
Yeah. So like we do a whole bunch of different things. Right now, I would say investors have slowed down since the interest rate hike. I would say some of them are coming back, but I would say they're the much more sophisticated ones, where they're like, hey, I understand that I am buying this asset. It's not going to cash flow. I don't need the cash flow. And just coincidentally, like I would say most of them are of like finance backgrounds. So like they understand the arbitrage. I can buy this thing for less than replacement cost. I might as well buy it, take a little bit of cash flow negative. It's not the end of the world when it explains to them. Like it offsets against my higher income anyways, or like even doctors or something. And it's just easier to manage. So they are coming in and they're like, Zhen, if you can find me a property that is, call it, 2016, 2017 pricing, I'm like, sure, I'll buy it. And I have seen a couple. So like a good example would be like, we saw a building that was, call it, trading at usually $1,000 a foot. And then someone sold for 800. And as with all residential real estate, your property is worth what the last person sold for. So that one fire sales dragged the entire thing down. And we actually submitted an offer, I think earlier this year, and we got for like $750 a foot. You can't rebuild that in like downtown Toronto for less than that. So that was like one good deal.
And what are their plans for this? So they're going to hold these properties for a period of time?
It's just tenanted. Yeah, they're long-term hold. Everyone that I talk to when I explain to the fundamentals of them, they're like, yeah, we're just going to hold this for a very long time. And it's either the dollar gets debased or over time, the tenants eventually pay it off. Because when you factor in the fact that you get mortgage pay down on the equity component, you're technically, I don't like to use the number, you're technically cash flow positive, right? Like a few $100. Because right now at 4% interest rate, like 40% of your first payment is equity. So it's not that bad.
This fall, the Empire is back, but so is the Resistance. On Saturday, October 18th in Mississauga, it's the Your Life, Your Terms event, Ontario's most energized gathering of real, in-the-trenches investors. This is the Resistance in action. 1 day of real strategies, fresh ideas, and new allies who believe in living life on their terms. The lineup, out of this galaxy. Ben Rabideau with the sharpest real estate and economic data. Tom Karadza on global forces reshaping Canada's future. Nick Karadza on the money revolution changing finance forever. Dave Butler with 5 game-changing investor mortgage programs. A powerhouse panel delivering blunt, on-the-ground real estate insights. Tom and Nick on launching and scaling income streams for freedom. Dr. Caitlin Link on taking control of your health and fitness. Past attendees call it a must-attend, electric, and say they've walked away with tens of thousands of value from a single day. Ticket prices rise as the event gets closer, so the earlier you grab your seat, the more you save. Some tiers include extra bonuses you don't want to miss. So the question is, will you sit back while the Empire makes it harder for everyday Canadians to get ahead? Or will you join the Resistance, take your seat, and rise above the system? Go now to yourlifeyourtermsevent.com and grab your ticket before it's gone. That's yourlifeyourtermsevent.com before ticket prices rise. If you're a Rockstar member, your ticket is free.
So, but how many of these people that you're talking to are talking about currency debasement? Like that's what, because you said that, and I'm like, what? How many people are coming into it saying, well, you know what, I'll buy it here now because I think the currency is going to be debased, so it's going to go up in like the price tag's going to go up over time just because of the debasement. Like that's actually a conversation that you're having.
I think because of the way I talk, and I try to simplify certain things, right? But when I get a little bit technical, I think the people who understand the technical come on to like, oh, Zhen knows what he's talking about. And I speak finance, right? To a lot of people, like cap rates and everything. So the finance people like it. The accountants and engineers love all the spreadsheets I do on YouTube. So like a good chunk of my clients are very like white collar sophisticated. So when they say money debasement, all that stuff, they understand all of that. They do. But then when like I talk to a first time home buyer and I have to kind of like change the language I use, I'm not saying, hey, you should buy this or whatever. It's just like, buy this because you basically want to own and have pride of ownership. Because there's no other way to explain it to a first-time home buyer. Like, because right now, even though I do the math, like renting makes more sense in a condo space than to buy something, unless you're getting it at like $800 a foot.
Yeah. Whose idea was it to start doing the YouTube channel?
It was mine unintentionally.
When did you start that?
I had the channel when I was here, and what had happened was everybody I was talking to, and when I was like selling pre-construction, I kept saying the same thing over and over again. So I was like, at the midway call, I'm like, hey, you know what? I'm going to send you a video. Just watch this. It's 5 minutes. And then like, I just hang up or I go on mute and just do other work. Right. And then they watch, they're like, oh, this makes a lot of sense, because in a phone call, you couldn't visually explain things. Right. So I basically had a recorded video where I did a PowerPoint deck, which a lot of people know now, which is like Loom, but like I did it with different software before. And they watch it. They're like, oh, I get your thesis. This makes a lot of sense. So then that became something where I had a lot of, repetition. And then eventually people ask me, oh, how's the market? You know, like people, when they know you're in real estate, like, hey, how's the market?
Yeah.
Like,
it's the most fully loaded question.
Yeah.
Like, all right, I don't know, do you have a couple hours?
Yeah. So then when people ask me, I'm like, here, just watch this is my update. So over time, that actually just became something I did over and over again. And then when we got locked down, my wife lost her job, and we were like, let's just do this, see how it goes. We tried some podcasts, tried this, and like it just kept working, and it became a very good marketing engine for like our business.
Yeah, that's awesome, because there's not many people, and I don't know because I don't go on like in the Toronto real estate space and start looking at everyone's social.
Oh, I try not to. So I try not to.
But you got to be like, I mean, you're what, 18, 19,000 subscribers on YouTube?
Yeah, close to 19.
There can't be many, if any. Like, you know, I don't want to use the term real estate agents because I just feel like we just need different levels of terms, you know. But anyways, but there's not that many people in real estate in sales in that world that have that kind of subscriber base, I think, right?
Yeah, I think it was like for me, it was a combination of luck and just like something I landed into. I think I was telling Tom the story. It's actually very funny how I got into it, like the YouTube, sorry, not YouTube, but making the videos. It's the person who actually originally started doing videos online was a friend of mine named Peter, who's Andy's cousin.
Oh, really?
Yeah. So he's Andy's cousin. And I actually got my license because we were doing like an app startup with like 4 other guys.
So he was doing videos about real estate?
Yeah, he was the OG. So like if Peter, you're listening, like I command, you are the OG. Like he was at 1,000 subs and I was like, whoa, you got 1,000 people subscribed to you? And then he was the person, like I drove to his house to get like the lap mic to do my first video on YouTube. So I remember this. And then it's just funny because like after I did that, I ran into Andy here, and like Andy was part of like this whole group where he was still the basement guy. And we were...
That's right. I forgot.
Yeah.
That's
so
way
like,
back.
It's a hilarious way that we're all interconnected. So like, that's how I got started. It was just complete unintentional. It kind of got a little bit of traction, and we're like, you know what, let's just double down on that. And we ran like paid marketing around it. We did different like CTAs and different ways to kind of attract people, get on newsletters, all the things you guys have taught me, and then just kind of worked out.
Yeah, good for you, man. It's nice, but I think it just goes towards, so like, that, you know, it goes towards the stuff that you're sharing that people find valuable. And then I think also it's just, you know, who you're speaking to. And I think maybe sometimes people forget about that. Like, you just don't need to be all things to all people. Just like we weren't really the condo people to turn to during that phase, that kind of manic phase when things were kind of going nuts. We were just not those people, but we were speaking to a different people. We were doing something else. It's like you're speaking to what sounds like now, like young professionals, generally white collar jobs, have some sort of understanding of finance. They hear how you're explaining things. They're like, oh, this guy kind of makes sense. Maybe I should reach out to him.
Yeah, they love the spreadsheets. Like the feedback I get is whenever I press the calculator button on my computer, when I'm doing it live, they're like, we love it.
Yeah,
it's hilarious. I'm just like, okay, I'm like, like on YouTube. It's not like, you know, sometimes you have like all the numbers on like a whiteboard, it's all done. They're like, no, we just like it when you press it in. I'm like, okay, that's an interesting feedback.
Makes it real. Yeah, makes it real.
Like, oh, he's actually doing it live.
Yeah.
I'm like, okay.
Yeah, they don't have to go double check it. Because I've had people double check, but they're like, well, I had to go double check your math. It was right. I'm like, I used a calculator, to be fair. You know, so it was either a typo on the calculator that I hit. What about the rental market down there? So you're kind of seeing that stuff with, you know, the sales have slowed down, especially on the investment side. But what about the rental market that you're seeing with some of your clients right now? Is there demand for these units, or are they sitting for longer?
Condos are sitting for longer.
Yeah.
How we are pricing rental units in like Toronto right now is whatever the last one is, one, we have to have really good looking photos. So we always send a photographer in. And you know this too, like doing rentals on the list side, it's basically a loss leader, right? You're not making any money on it after sending people in. You have proper photos, then you digitally stage it so it pops. And like the analogy I always tell people, like all our clients, I'm like, you want to be like the prettiest girl in the room right now, because when you walk in, you want to command attention on top of the fact that you are the best price unit. So that last one sold for, or so at least for $2,500, you got to be like $2,450 because vacancy is going to cost you more money. Mm-hmm. So when we explain that to them, like, okay, let's do all of this. And then it still takes like 2 weeks to find the proper tenant, because what we're seeing right now is we've beefed up our staff to screen tenants, because it's been a lot more work because we don't want to put a bad tenant in there, going through single key, cross-referencing geo warehouse, which, you know, if you're not in real estate, it's basically the ownership. We call the landlords to make sure the landlord still owns the property. We have to run through their employment. Then we actually call the actual company, ask the person that's on HR to make sure it's not real. So all of that, it takes 2 weeks to find one good person.
Yeah.
And there's so much fake stuff. There's so many, I would say overcrowding of it, because usually we try for like, you know, not more than like, you know, one person or whatever your bedroom is plus one. That's how many people you have. Sometimes we're getting a lot of people going into it, and it's just like automatic, you know, disqualification, right?
Yeah, and there is, for anyone listening, I mean, the amount of fake stuff that's going on, that gets submitted, like the fake paperwork that gets submitted right now, it's over the top. Like, you can't, it doesn't matter what source you think it's coming from, you got to double check everything.
We had one today, actually. My assistant sent it to me. I was like, oh, this is actually really, really legit. And then when I was going through the numbers, I'm like, wait, that doesn't make sense. Because I'm like, your year to date doesn't match what that number was. But it was perfect. Everything was perfect. And then I redid the numbers. I'm like, okay, your year to date is off by 50%. Like, something's off. So then when we dug a little bit deeper, there was like a fake website and stuff. I'm like, holy cow, it's insane.
Yeah. That's it's just, and it's just going to get worse now.
Yeah, but like, the rental market very soft right now. I think there's more people doing leases because, you know, to survive on the real estate side.
So that, and you feel that's more people, more investors have closed on or more people have closed on properties. They were likely as secondary properties for people.
Yep.
So, and they can't sell it, or they don't want to sell it at this price, so they're leasing it.
Here's the most common question I get and the conversation I have when people book a call with me. It's, hey, I bought a condo. whatever price. I'm like, can I sell it? I'm like, well, if you bought it for, like in 2021, you bought it for 40% on top of the resale, you have 20% in the deal. Even if you sell it, you have to pay 20% before like your selling cost to that person to take it off your contract, because no one's going to want to buy your assignment rent when like you're basically, one of 20,000 assignment market listings, right? So you have to like incentivize them. So they're like, well, I don't have money to pay it out, even if I want to get off the contract and not get sued by the builder. I'm like, so then you have to close. Then when they do the math, they're like, well, if I close based on this, appraised value, if I get the blanket appraisal from this particular bank, I'm underwater by 1,500. Then when I get to the point where they're occupying instead of like final closing and they've agreed that, hey, we're going to lose 1,500, they get shocked by the occupancy fee because interest rates are also very high right now. So now they're like, it's like, wow, why is this so high? And then when I run the math with them, I'm like, well, you either try your rent at this price, try to be, less cash flow negative, or you let it sit empty for 2 months because you have another 200 units and this entire stack of units looks like yours, and you just have to race to the bottom. Either you are the cheapest one and the next few people are less than you by 10 or 25 or $50, or you just sit there and then eventually you get to that price point. And I'm just like really upfront with people. I actually have a video. I'm like, this is how the math works out. Like, how I was saying when I started YouTube, like, this is what I send the person afterwards. I'm like, I'm trying to help you. Like, I'm not making any money off of doing this. I'm like, this is your option right now, unfortunately.
It helps. You know what? It's amazing. Something that seems so obvious to you is, I think it helps people, because I know I've had to sit down with people and they've wanted to sit down and just review their portfolio as a whole, and they don't have their numbers straight.
No, they don't.
Like, they're like, well, I'm like, well, so like, how much is this one positive or negative, and how much equity do you have in this? Or, oh, you just refinanced this one, so what does that mean now? And the number, they're like, well, I think it's kind of like this. I'm like, guys, like, if you're going to start making these decisions, you have to know, like, you got to get your numbers together. It sounds so basic, but it's like, and I know everyone's busy, but I mean, man, if you're going to make these educated decisions, your own finances, if you can't create a clear picture of where things are at, how do you know whether to fix that picture or not?
I actually think people spend more time looking at where to go on vacation and doing due diligence on their hotel than when they bought this pre-con. Because a lot of times, like, I try to just assess, because I don't know every project. I have access to looking at the records and everything, but I'm like, hey, what did you buy? Can you tell me? And they know the price, obviously. I'm like, can you tell me how big it is? And they're like, oh, I don't know. And they're like, I bought it for this. I'm like, so is that the interior space or the exterior space? Because sometimes in marketing, they bundle up the exterior space. And they couldn't answer that question. So I know that maybe they weren't doing the most due diligence. Like, always give them the benefit of the doubt. And I'm just afraid because I'm hearing this over and over and over again. So when I tell them what their options are, they're really shocked. But most of them are like, Zhen, thank you for telling the truth, even though, like, I don't want to hear it. And like, if I can help you, I can. If you need me to connect with someone to help you close, that's fine on like the more blanket appraisal side, right?
Yeah.
And that's all I can do basically. And I get about 3 to 4 of these a week.
And you know what? You got to remove the emotion from it too. I think to me, that's the best part, is when it's all laid out there. Even your conversations you're having with people, it gets a lot easier because you're just looking at the numbers. You're not making an emotional decision. To your part about rents and sometimes leaving it vacant, for that extra month because you're fighting for an extra $1,500 a month. It doesn't make sense. I have a friend of mine, someone in our office was trying to help him fill a property in Mississauga. And, he really wanted this number. I forget what 20-something hundred. I forget what it was. So someone came along, looked like a good tenant. They did the background check. Everything checked out. They seemed good, but they were only they could only afford, and responsibly, because they know their budget as well, which kind of tells you something about the person as well sometimes, right? They could only afford $100 less, but they were willing to pay 1 year up front. Because they're like, hey, we feel comfortable with this. We know we can do it. We'll even do this. I don't know the whole story of why they had those funds and they were willing to do it, but it all apparently checked out, right? And he turned them down. He's like, no, I want the higher number. And I was like, what? But it's going to take longer, and you're $1,200 difference for the year, and your place is rented now. So
and all we can do is take emotion out of it. Like, one of the things I train all my agents is like, high intention, low attachment. Just do what you can based on your principles and values, and whatever the result is, that you tried 100% and you did the right thing. Whether it pans in your direction or not, you never know. But in the grand scheme of things, hopefully everything kind of balances out to be normal. So you have some that will agree with you, some that don't.
And I guess that's what served you guys over time, right? And that's why people circled back, or they watch your stuff. They circle back here.
We try to be neutral about it. I'm not peddling the market this way or the other way. It's just this is the information that I've been given. And I always say, like, when I get new input, I have new output, because like data changes, and I have to change my opinion on things if that is seismic enough of information to alter my like thought process. Yeah.
So you're boots on the ground in the Toronto area. I know you kind of stopped doing a ton of pre-con early on, but you were still had a lot of insight into kind of what was going on and what might be coming our way. I'm curious your thoughts now on where things sit and kind of what might be headed our way over the next kind of 12, 24 months, specifically in the Toronto condo market.
If it's Toronto condo, I think it's going to be very slow. I was telling a lot of people that was selling, I'm like, 80% of my calls are, hey, I want to list. And we are turning down listings. I'm like, this is going to be your price.
Are these generally, sorry to interrupt, but are these generally people that have recently closed on a property, or they're ones that they've had it for a number of years?
The latter. They've had it for a number of years. Like they bought before 2018, 2019. The ones who have closed recently, they don't like the numbers, so they won't sell, or they may go somewhere else. It's just not like what I tell them, that is from my data factually that I can see, they don't like the numbers.
You mean, what you mean is the value you think you can sell it for?
Yeah.
Gotcha.
Like I whenever someone asks me something, I always just send them a video. I'm like, this is all the comps are. This is your price per square foot. This is what the last guy sold for. At this price per square foot on your unit is what I'm going to sell for. And then I have a calculator that basically says, hey, this is what your mortgage is. When you exit, you have to pay this much money. And the minute they realize they have to pay to sell it, they're like, I'm out.
Yeah.
And then I see that with all pre-construction closings starting from 2019 forward right now. Like nobody is in the black that I can see. Nobody is in the black.
Really?
Nobody.
Even from 2019?
Yeah, because if 2018, 2019 was all like $1,000 a foot, you're like trading average maybe like $900 a foot right now in Toronto. In Liberty Village, you're at $800 a square foot, which is a far cry from $1,100. Your downtown core, like 10-year-old buildings are like $900, $850. So
and
like,
then when you add on fees on top of that, like even a mortgage penalty, legal fees, realtor fees, all that stuff.
Yeah. So like we have some clients we're working with right now, and they are trying to, like we bought them their first condo, and the idea is like, the real estate ladder, you move up. The real estate ladder is broken. Like what you're selling your condo for is like plus or minus 1 or 2% from what it's worth right now. Yes, you have mortgage pay down, but you don't get that appreciation bump to get you into the freehold. Mm-hmm. And then the freehold right now, yes, they're coming down, but that gap between it keeps widening and widening because the condos are coming down faster. I
looked at them the other day. I looked at that gap. It's pretty big historically compared to where it's been. I think it's about a 42. Was it 42% premium? I'm blanking on the number, but I just know that the premium now for the purchase price from condo to freehold in Toronto has continued to grow. It's at a pretty. It's higher than historic averages.
I know what chart you're talking from. It's the Urbanation one, right?
This one might be from, I don't think it was Urbanation, no, because I'm trying to think of the list of reports that I read. Usually it's not the Urbanation one, or it could have been sourced from there and put somewhere else.
Yeah, but like I know that 40% number because it's basically they're saying what the discount on the freehold is compared to a condo. And I think that's how they're measuring it. So the lower the number, the worse off you are. And the number keeps falling and falling because,
higher the number.
Yeah, the higher the number, the worse off you are. And the number keeps getting higher and higher, where ironically, the lowest was actually in 2021.
Yeah, because it got in the 20s at one point.
Yeah.
And that's when I was like, oh man, I think freeholds might move here because if there's not that much premium to move from a condo to freehold, more people are going to be able to move up to a freehold and they're going to try to jump on it.
Exactly.
Right. So yeah, so it's an interesting number to watch because it's something that I often watch as well. And it's just the replacement of those freeholds just isn't happening.
It doesn't exist.
Yeah, right. We just don't have the land.
You don't have the land, and most of the infill projects are usually turning like a bungalow in Toronto into a McMansion. You have your rare assembly where you have infill townhome, which call it ground-based homes, but outside of those things, you're not really building any single family homes for people to raise families in. And that's why everyone goes into like the York regions or Peel regions or Durham region and surrounding it, and you can get a 3-bedroom town for like $1 million right now. Mm-hmm. But like that jump from your $500,000 condo is still like 2x.
Yeah. That really shapes the market. And then there was the work from home thing, which shaped the market too. But that's all kind of changed. You live in the city, right? No, where do you live?
I'm like in Richmond Hill.
Oh, okay.
Yeah, I'm not in the city. I'm a city boy, but once you get married and your wife is from York region, happy wife, happy life.
I used to laugh at people with that. When people told me that when I was a kid, I was like, who are these guys? Like, what, they don't control their own lives? What are these guys saying? I will never be like that. When I grow up, I'm never going to be like that. And now, first thing I tell anyone, oh yeah, happy wife, happy life.
And what it is like, I'm so comfortable with who I am. And it's just, you know what? Some things just aren't worth fighting for. And I always tell people, I'm like, I am the CEO of my business. My wife helps me. And like, obviously she has veto power. But at the end of the day, in the family settings with like our kid and everything, like you're the CEO of the family. You let me know what's going on.
Yeah.
Right. That's it. It's easier because I can download some of my like responsibilities to her. And she tells me like, just do this, do this. I'm like, okay, that's fine. And people don't understand that. So like the easiest like saying to people is like, happy wife, happy life.
Do you, yeah, 100%. Have you ever told your wife that you pick your battles with her?
Sometimes, yeah, but I mean, she doesn't like hearing it. I don't think she's going to listen to
it's
this.
Funny.
Yeah,
I probably shouldn't put you on the spot, but it's funny because I've told my wife, I'm like, oh yeah, I pick my battles because I try to explain to her how, with our kids sometimes. I'm like, yeah, like why are you going to fight over that? Like you got to pick your battles. Like, well, how do you think? Like, you and I work together. I pick my battles, and not that she has to. I mean, she picks her battles with me, I'm sure too, and she's pacing with me. I'm not saying I'm perfect and she's not. That's not what I'm saying. But whenever I've told her that, she just gives me this look like, even if you're doing that, don't tell me you're doing that.
I don't think she's going to listen to this. I don't think sometimes I have told them like, hey, this is what I'm thinking about. Because we're we're very involved in like our investment and our portfolio and everything. And I'm trying to like orange pill her. So I'm always like, hey, can you just have a listen to this? I'm like, oh, you're doing a little bit of a commute right now, drop our kid off. I'm like, can you listen to this? Like, nope. I don't, she's not going to listen to this.
I send her the odd podcast for that type of stuff on the finance side of things. And she's like, she gets it. They're just not her favorite topic, so it's harder for her to go through them, which that's fair. I mean, how many people like listening to that stuff? I get it,
Because she is, I was telling Tom this too, like she is the one that does all the thumbnails and she makes the titles, right? So like I just tell her the bulk of it. And whenever I get to economical or I start talking about debasement, she always just like texts me this emoji, which is like, your video is like a snost. So it's like the little emoji with like little Z's.
Yeah.
Just like zzz.
Yeah, because most people aren't thinking, and it's crazy because probably for you, especially if you've gone down that path, and I'm curious, like, do you think that touches so much of what impacts you and everyone on a daily basis? Is that why you touch on that type of stuff?
Oh, 100%. And like so much of, I think, where we have built our business stems from like what you and Tom taught me. There was like all the entrepreneur boot camps and everything, right? And like I still chat with Andy, right? So like there's a couple of us who flowed from like your business teachings, right? And the whole kind of understanding your value proposition and understanding what money is when you guys taught us has resonated with me. So when people come to me and I'm like, but you don't understand the bigger picture into like what's happening right now. Like even when I try to explain it to some finance people, I'm like, real estate going up 6% a year is not a good investment. Not because the money is being debased, because for the risk you're taking on, I rather put it in S&P 500, which averages 10%. And there's no like management. It's more passive. But where you make your money on real estate is the leverage, because if it goes up 6% and you're at 20% down payment, that's 5 times. So that's 6 times 5, 30%. So when some of our clients were like, well, I want to put a larger mortgage down, or sorry, larger down payment down, and then reduce the mortgage so the payments are more comfortable. I'm like, but you're coming to me for optimizing ROI. When you add more down payment to mitigate your risk, and I understand where you're coming from, it reduces your return. So real estate only makes sense if you have leverage in it. So we have a property where I'm trying, like, we have no mortgage on. I'm like, can we just get rid of it? It's not serving us any purpose.
Yeah, it's almost like refi. So we're in that situation with a couple of properties now where the mortgages on them are quite small. And then we're just like, okay, so like we either got to refinance this thing or we got to sell it and move into something else. You know what I mean? Another property, like who knows, whatever it is, right? It's like now's the time we kind of got to revisit it, because it's just the what it's providing us just isn't what it was providing us. The only argument to make against that, and I'm making it against myself, because I've been having this discussion with myself, is like, well, there is the argument of like when it's spitting off a whole ton of cash flow, because we're just looking at the value the price of it over the long period of time, right? So you get that. But if it is spitting off a chunk of cash flow, so if you have a property that's one of these properties is a student property, so what does it spit off? $5,000 a month or something like that. So if it's spitting off $5,000 a month, then the argument can be made, well, just for that stream of income, it's kind of nice to have that stream of income for yourself, to do whatever you choose to do with it. And then maybe for that purpose, it's still not the overall best ROI. But then, so this is the battle I'm in with myself right now.
So I have that conversation with myself the entire time.
Yeah. So where does it go for you?
So I have to preface preface this. I have to preface this. Like my philosophy has changed a lot more since I had a kid. So my guy just turned 3, and more is about how I spend more time with them.
Yeah.
Just downsize kind of like our portfolio and just like less headaches, right? Because like, when we're on vacation, I'm like, oh, another kind of vacancy.
Sure,
I think it's annoying.
And it's only when you're on vacation that it comes up.
Yeah. I don't think, can it not be at that time?
It probably means you take too much vacation.
That could be that too.
Which is a good problem.
But when I look at it, I'm like, okay, well, from a financial perspective, then your argument is I'm looking at the cash on cash return. So let's just arguably say that property is worth $1 million. If it spits out $5,000 times 12, that's $60,000. That's a 6% cash on cash return. I can put that in like an aristocrat dividend or something for 7-8% without having to deal with tenants, right? So like, yes, I know I own the land, I own the real estate, there's the upside. But if you knock out the fact that your appreciation, call it, is the same thing as like S&P 500 and you have no leverage, it doesn't make sense. So like sometimes I think I'm like, well, maybe I would like, because I don't want a large amount of mortgage because sometimes maybe I don't want to work for a little bit, right? Maybe
or when rates go up like recently,
exactly,
you get squeezed, right?
Maybe I do like 35% in the deal. So I'm like still 3-1 or like even like keep some of it. And this is what I'm grappling with right now too. Because like we're like, well, do we downsize the portfolio? Do we put it in something that's a little bit easier, right? Because I feel like there's going to be a target on the back of investors very soon. I feel like taxes will come, like there's that capital gains whole kerfuffle. Like I feel like it's going to be less lucrative to be in real estate at some point. And so it's like, do we hold on to all of these things? So I'm like, what is the optimal amount of stream of income relative to risk, relative to pain in the ass return? And I'm juggling with that right now too. So it's just, everyone's got a different, call it burn rate based on your living style expenses. And that's why I was telling them like, everyone's got a different situation. So I'm like, based on my burn rate, do I put it in here, like, and this is why I'm starting to understand like, 60-40 bonds portfolio. I still don't agree with it, but I understand where you're de-risking yourself. But this is only a conversation that you can realistically have when you call it, you've doubled down on a lot of stuff and you created some wealth.
Yeah. And that's, yes, I agree. And, that's something that we talk about sometimes. Like everyone goes through these different stages as an investor. So when I was in my early 20s and I started investing, I was like, well, if I have $1, can I give you the $1 and you give me the house with 101% leverage or whatever it would be? Like, I don't care. Just give me all the leverage. I just want the property. I'll figure out the numbers can work and I'll make it all work. Right. So, and then over time, as you've just reached different stages of your life and maybe you have kids and there's different priorities and priority shift. And you're just like, oh, okay, maybe I just kind of want to readjust my portfolio now. And you need a portfolio to readjust. Exactly. Which now allows you to be like, I'm going to focus on some income more. I want to take cash out this amount to do this with because it allows me a little more freedom or flexibility. And I guess that's where I'm coming from. And that's why I like those, the income stream specifically is I'm like, it kind of puts you in this position of like, hey, you know what? I have income coming in and I just don't care. So like if I want to wake up one day, I'm like, I really don't feel like doing whatever it is that I have on my list of things to do today. I'm not doing it. That's it.
I agree.
Sorry, let me just finish just to what you said. But having said that, something else that you have to take into account, which a lot of people don't, and it sounds like we're having similar discussions with ourselves, is jurisdictional risk. And that's a real risk. That's a much greater risk than it was, I think, 10, 20, 30 years. Well, I haven't been investing for 30 years, but I know it's something when you start investing, you never thought about because it didn't impact you. But then when you have the assets, you're like, oh shit, now I got to kind of think about this. So, but I did cut you off. So hopefully you didn't lose a train of thought.
I most definitely did.
Yeah.
I most definitely did.
Sorry. It was before I talked about jurisdictional risk. I was talking about the cash flow component.
Oh, yeah. But like if it comes down to like stream of cash flow versus like net worth, I'll take the cash flow every single day.
Yeah.
Always, because I don't care what my net worth or assets worth because
on paper,
on a swing and dime something, but I can eat cash flow, right? Like cash flow allows me to take it to the grocery store. And that's what I've always lived by. So like, I do agree with like, if you have a paid off property, like do you just keep it so it spits you that kind of cash flow?
Okay. Or then do you don't like to what you were saying, you don't refinance it up to 80%, you take 30%. And then that's basically your cash flow. You've just taken it as one lump sum. And then you still have that property and it's generating more for you, it's doing whatever it needs to do. And then you're able to then use that initial cash flow, whatever that number is, and you can use that for the next year, 2 years, or for whatever you want to do with it. Because likely if you've built a portfolio of stuff, you're probably a pretty disciplined investor anyways. You have that discipline where some people might get that money, a couple of vacations, a boat, and it's gone. But if you have that discipline, there's no real risk there. right? So there's that balance as well. And then that gives you the 3-to-1 leverage maybe instead of the 5-to-1 or less. Even if it's 2-to-1, you're ultimately like you're finishing ahead, right?
Yeah, because like it really just depends on what the hurdle rate is, right?
Yeah.
You kind of almost have to adjust your leverage to what the hurdle rate is, and the hurdle rate like just changes constantly.
What do you use as your hurdle rate?
Well, I mean, because of you guys, like M2, right?
Yeah.
That's basically
So
it.
7%, something like that.
I use 10.
10, yeah.
Because I'm like, it's gonna get worse.
Yeah,
it's gonna get worse.
it's right.
I feel like it'll be 10 once the new budget comes out.
It's probably closer with obligations and stuff like that. It's probably closer to that anyways.
Yeah. So like if say real estate averages 6%, some 7. If I do 3x on that, I'm 18, I'm good. Like even at 2, I'm like, okay, I'm just beating it. But then I'm like, well, if I have to take on the pain in the ass of dealing with tenants, and I'm not the one that even actually deals with it, it's my wife, right? It's like she's the property manager.
Yeah, but if she's pissed off because she's dealing with something, you have to deal with that. There's trickle down for everyone.
Exactly. So I'm like, well, then the 35% 3-to-1 kind of leverage is kind of like that sweet spot for currently where I am in life.
Yeah.
Right. So, and then the problem is like now that I have a kid, I'm like, estate planning. I'm like, which is a tax effective way, because when you take income, that's taxed a different way. I think it's just too complicated. It's way too complicated.
It's complicated because our system's so screwed up. And I agree with you wholeheartedly about the estate planning and the taxes and stuff like that. If it needs to be that complicated, it's just because it's a mess.
Yeah.
You know what I mean? That's basically what it comes down to. And yeah, on November 4th, they're releasing this budget.
Are we sure? I don't know. They keep delaying it.
Well, I mean, it's like a budget halfway through the year. So does it even matter anymore at this point? Because half the year's gone. So it doesn't the only thing I would say is this budget better be the most accurate budget in Canadian history. Because if you've gone half the year and you can't even forecast close to the next half of the year, you have real financial illiteracy problems. You know what I mean? Like you don't even have to budget for the last 6 months.
I know.
You've actually know the numbers.
I know. And this is the problem. Like, I feel like you guys would probably hear it more. Like a lot of my clients, maybe they're still younger here and they're still like local, but the people I talk to that have amassed a little bit of a portfolio in the jurisdiction where they're like, what is tying us to Canada right now? And like everyone's just talking about like, do I exit? Like how much of my stuff is stuck here? Real estate's not as liquid. And I'm hearing that over and over again. And people are just not confident in our government's ability to manage this budget, which is like, well, if we keep our money here and we're trying to beat the hurdle rate, is this hurdle rate going to keep changing on us? And like I have to keep going on to more riskier and riskier assets or having more and more leverage on my portfolio just to basically keep up with like the cost.
That's interesting, man. Like what age group are these people having this conversation?
Is it people leaving or the people staying?
The people that are thinking like, do I have to leave? Like, should I look for options and stuff?
Basically their kids are in university or they're gone.
Their kids are in university.
Yeah, so
they're in their 40s or something.
50s,
okay.
Yeah, but like the people I'm talking to who just had kids, like similar to my age, like we're talking about school districts right now.
Gotcha.
Yeah, so it's a little bit different.
Yeah. Yeah, because the kids and the family kind of, will hold you here longer than that. 100%. That's one big thing. Yeah. It's just weird that like, 5 years ago, the number of discussions that people were having with us about like, I don't know, should I move on someplace else? Like, should I just explore options? Like I could count them on one hand. And that's how many discussions we had in the year. Now that's like in a week, how many people might bring it up? Like it's bananas. Like it's completely shifted, right? We know another guy, Tom just had friends with another guy that he knows from school, just kind of out of the blue, hadn't spoken to him in a while. I think he's listened to seen some of our stuff or listened to some things. And he reached out to him because he's like, hey, I'm gone in a few months. Just wanted to get your thoughts on a few things. So he's taking off. Another productive Canadian that's taking off. And then it was a couple weeks ago, 2 or 3 weeks ago, I found out about 2 other people had left. I'm like, holy cow, what is going on here? Right. Part of the reason was it's just a number of reasons. Some of them were from other places. Some of them were born and raised here, and they're just kind of shifting. And I'm just like, this is a weird dynamic happening right now. And it's starting to be spoken about more. Like you're seeing it, even the odd headlines in like legacy media.
Brain drain.
Yeah. You're starting to see that. And I'm like, oh, this is interesting. Maybe it's finally getting people's attention. And then you see other ones, because other people will be like, they'll send me articles like, see, this, it's not a problem. We have more people wanting to come here. And there'll be like some article in the Toronto Star about all these people trying to leave America and they're going to come to Canada. And I'm like, guys,
that happens every 4 years.
I know. And I'm like, I'm telling you, like, whatever you think you're reading, I'm just telling you on the streets, it's not happening. It's a load of BS. Like, it's just that's total crap. Once they find out how much they're going to get paid here versus down there, if they're a doctor down there versus is here and what the cost of living is here versus there, trust me, they're going to turn right around at the border and they're going to hang out there a little bit longer.
I know. There's a person I talked to who's like pretty big in the real estate space and like call it a little bit older than even us, right? And he's
even more prehistoric than me?
Yeah, a little bit. Yeah, a little bit more prehistoric than you. And he's just like, yeah, like all our clients have amassed some wealth and they're all just like exiting, right? And it's whether political or financial reasons, they're just like, he kept telling me, it's like all his clients were saying, it's not the same Canada that they were once raised and created the wealth. And they're like, it's just different. Mm-hmm. And that's what we're saying. Like, and I don't know if it's a good thing or a bad thing, because when I'm hearing this, I'm like, oh, my kid's going to be like here, education and everything. And like, we're pretty rooted in here. I don't think I'm leaving anywhere. But I'm like, I feel like it's a huge uphill battle. I'm just like, I struggle with that decision because I have the option out. So I'm blessed, right? But I struggle with it.
Yeah, it's just because you have the context from before, I think. You know what I mean? Because some people will tell us that we're beating up on Canada with these conversations. And I'm like, no, I'm not. I'm just looking at it. I'm trying to look at it as objectively as possible from the past to now. And that's the way I look at it. And to be fair, there's a lot of people that are looking for places to go. They're like, I don't really see any place that looks like this. Like, this is the place to be.
Yeah, there's a lot of still great things about Canada. Don't get me wrong.
Yeah.
Like when I go back to like Asia, I'm like, Canada. Yeah, for sure.
Yeah, 100%. But you know what? My neighbor said it best to me once. He's a Chinese guy. I don't know how long he's been here. He told me and I forget. He's like a contractor. His kid's in high school, and he's saying when his kid's done school, he's going to go back to China. And the way he looked at it, which I thought was interesting because no one had said this to me before. He's like, look, when I came here, Canada was a great place. And he goes, it's still the same place. And then he just paused, and I'm like, oh, yeah, Canada's good. He goes, no, like what I mean is Canada's the same as when I came here. Whereas so many parts of the world, so he was talking about China and stuff. And I know China, from the government, there's other problems. But he goes, if you go to China now, he goes, they've progressed so much with roads and infrastructure and technology. He goes, if you see, he calls me buddy all the time. He's like, buddy. If you say, yeah, he's an awesome guy. I love this guy. And he's like, buddy, look at this. He's showing me pictures. And you just see all these things. And I'm like, yeah, he's like, we're the same. Nothing's changed. We
haven't progressed.
Yeah.
It goes back to like, per capita GDP, it's the same thing. Because I remember going back in 2019 after I got married, just like, we had a wedding back in Asia, like wedding. And there will be obviously still your homeless people. But it completely blew my mind because at that time, WeChat had Pay. So the people on the streets had a little QR code to basically accept money, which meant they had a phone. And when, like, I have a cousin who's like 6 days older than me right now, so I have very good contacts. He came here, got his PR, he did the whole education thing, and my aunt and uncle were like, go back to Canada, because like in their mind, Canada's the greatest thing. But I talked to him, I'm like, he went back to China like 3 years ago. He's doing marketing for a shoe company right now, and like Kyrie Irving just launched a shoe, and he's like, it's amazing here. I work from home, technology is great, like it's a real hard-working culture, and things are still absolutely expensive, but like it's more comfortable here. Mm-hmm. He's like, it's gotten so much better. And this is like my cousin who's like my brother. We basically came from the farms, right, where we had like 3 walls in our original home, and then like it was a really 800 like square foot like apartment that we both grew up in, right? And then I came here when I was 5, and he stayed there, but he came here when he was 20. So like I see the similarities between like China now, and like your neighbor's absolutely right. Asia has advanced so much more. Like there was even this one picture I was looking at, the number of subways or like train stations that like I think Asia has built, and compared to us, I'm like, we got the Eglinton LRT, hasn't opened yet. It's like 10 years later, it's like entire map. It's like Paris.
No. When it comes to that type of stuff, it's mind-boggling. And the counter argument will be, people will be like, well, they're using forced labor and they're doing all this stuff. Yeah. And you're right. But I think in the same breath, I think we can admit that we're on a bad side of that too. So if they're one extreme, we're the other extreme. There's got to be something in the middle.
Yeah, happy middle. It's like
because it is
less red tape, less slave labor, and it's somewhere in the middle.
Yeah, because the way we build things here, it's comical. Like it's comical how long it takes us. I feel like sometimes I'm looking around and I'm like, guys, there is definitely one person that's building this new bridge, like on the QEW. I think it's taken so long. There's like one guy, maybe 2. It's like one. It's like the old days. It's like one Italian dude and his 2 cousins. Like that's what's happening down there.
Well, I was talking to my neighbor though. He was actually explaining because he's an engineer, and he's like, there's like running joke that my wife and I had. It's like, there's always one guy with a clipboard, one guy working, and two other guys, right? And he's like, actually, the clipboard guy is the manager of the person working, and there's two other consultants there.
Yeah, there you go.
Engineering firm, and that I'm like, makes sense.
Yeah, that sums it up right there. But yeah, I don't know, man. If I think everyone, there's no right answer. Everyone's kind of looking around. I feel like there's a lot of Western countries in the same boat.
I agree.
Right? Just there's a lot of bloat that's really slowed things down. There's a lot of priorities that, in my opinion, are just way off. Like if if you can't take care of your own people, you can't take care of the whole world. Like it doesn't work like that. And we're at a point where this isn't not to have sympathy for other people in the world, but like we really need to take care of we're at a point where it's like our own people are now suffering. We need to take care of our own people, and we need to make Canadians a priority. And then we can move forward. And that is not like the globalist term. So anyone listening to this that is like on the globalist agenda and they're like, well, it's all one and we all have to be one and hold hands and sing and stuff like that. That's a load of BS to me. That's not the way the world has worked up till now. That's not how things have worked through history. I don't think it's going to work that way again. And that's why I'm saying that, this isn't one type of Canadian. It's all Canadians. We got to look after our own stuff first and then move forward.
Have you read the book Sovereign Individual?
Yeah.
How close do you think we are at the end of the fourth?
First of all those books seem slightly kind of like outlandish until you see what's been happening. And then you're like, okay, so these are like a lot more accurate than I ever thought they could be, considering when they were written. I think we're not as close to the fourth turning as some other people. I think they can kick the can down the road for longer.
I agree.
And I don't want it, and I'm saying that hesitantly because I don't want that to be the case, but I've underestimated how long they can kick the can down the road, and I feel like they can do it again and again. And people are voting. Like it's weird to see, and I now we're getting into like political stuff, but it's just weird to see what people are voting for that doesn't, in my opinion, feel like it's in their own best interest. So, for example, Switzerland recently voted for digital IDs.
What?
Yeah, it was just over 50% or 52 or 50 point something. I forget. I'd have to look it up. But I'm like, why are they like voting for that? That seems, I have to look at, but I'm like, why would you want that? It doesn't seem, but the way it's positioned, like you're seeing the conversation happen in the UK right now. They're like, well, it's for the good of you. It's going to help because of employment, and it's going to stop, illegal immigration. And then people are asking the government, like, how's it stop immigration? Like if someone doesn't have a car, and so it's just weird to see this type of stuff kind of playing out. It's a lot of what Jeff Booth talks about. It's interesting. So, I think it's a little bit further away than we thought.
Because to bring this back to real estate, one of the things I look at is like, how far can we kick the can down the road? And I look into a lot of these like European places that have been around for a long time, and it's getting to the fact where like younger people don't actually like buy anything unless you have, call it parental help, and it's been like sent like money given to you. And when I understand how people like do leases in say like Germany, like you actually take your kitchen with you. Like,
no, I didn't know that.
Yeah, when you go lease a place, you own the kitchen and the appliances. So like you move your kitchen and the cupboards and everything to your next place. That
makes sense, because when we bought our place in Croatia, we thought Tom went there, I went and bought it. And I know I'm interrupting you and I'll stop doing this, but this was because it blew my mind, because I went and bought it. I'm like, oh, Tom, this place is going to be nice, blah, blah, blah. So he went there after it was done, apparently, when we got it. And he walked in, there was no kitchen. And we just assumed the kitchen came with it. And our cousin who was there, he's like, yeah, of course there's no kitchen. What's like... Yeah. There's not going to be a kitchen. That's normal. You have to go get your kitchen. We're like, what? We were totally confused. We had no idea. Like, so sorry. I didn't know they pulled it when they were renting though.
That is the norm. It kind of like when I bought a pre-construction, I'm like, well, there's no appliances.
Yeah.
Right. So like, that's the norm. And when I look at how real estate is shaping up right now, and I can't even explain this to people, like you'll understand it. I'm seeing lower condo sales. The replacement cost is too high relative to the resale value. But the only thing that is building right now are these like institutional MLI select, like massive apartment buildings. And I'm like, okay, we're building supply, but it's not supply that people can buy and sell. We're moving closer and closer to the European model where you're basically just renting from an institutional, good or bad, because like institutional landlords will take care of their property a little bit better as opposed to like a mom and pop, right? They're more active in it. But at what point is ownership actually going to be out of the door? Right? Like I'm not even talking about prices. It's just like, if you don't have anything to sell to people because no one's building these things, the only thing we're building are like rental stock, which is great right now. But then at some point, when is the Canadian dream dead where you actually own something that, your roof?
Yeah.
And all you own is your kitchen and your cabinets. You move from kitchen cabinet from one unit to the other.
Yeah, no, it's a big question, especially when you have kids, right? And I think that's why that's why more people are kind of exploring, maybe you don't go anywhere and maybe there's no better option, but it's like just trying to understand what those options are. And I just want to circle back to the Swiss thing, because I did look it up. I said it was 2 days ago at that time that it was 50.4% vote to introduce digital IDs, right? But
I don't see why they would want digital IDs. It's so easy to track.
I don't know what the pro and against arguments made specifically there were, but in my head, it doesn't make sense. If with the Chinese background as well, there's a lot of things.
Normal. It's very normal.
It's normal there, but
pictures of me.
Yeah, but there's reasons why they're doing it. So, but look, like having said all this, like I think the reason why we talk like this is like we know there's opportunity, even whether there's jurisdictional risk here or somewhere else, and whether real estate's overvalued here or somewhere else, and numbers and monetary base and inflation, it's all the same stuff's happening everywhere. I think the reason for us is just like, hey, there's opportunity. You can live however you want. I don't want people to think that. It's just like, to us, it's always been important about just understanding the game.
Yeah.
Because then once you understand the game, you're like, okay, now I can
know how to play.
Yeah. Yeah. And I think that's the case. And I'm just curious if you're looking at it any differently, because I guess I'm trying to I want to leave off of a note like, hey, like, there's plenty of opportunity. Like no one should be down. Like, all this stuff has existed for a long time. Maybe it's amplified over the last few years, but it doesn't matter. We're seeing people every day being able to change things. You're working with people that are changing their own circumstances and putting stuff into place. So I think that stuff still exists. It's not that stuff doesn't exist, but if you actually understand and believe the way things work like this, maybe you got to realize that's happening and then play within that rule set for sure.
Yeah, the game will change on you. Right. So like, let's just say the government will change the game on you, but you just have to understand the rules of that game, which is kind of going back to like, if, someone's trying to buy a property for their kids, that's just the game, the monetary game that they're playing right now. So they understand it. But if you don't understand that, you're just kind of going by your day very normally. And I don't blame anyone, because if like I was working 9-to-5 job, commute, and I have to like pick up my kid, cook for them. You have no time for this. And sometimes you're like, I just want half an hour to myself when my kids asleep to watch some TV. You have no time to understand this. But unfortunately, as this compounds and, my 3-year-old becomes a 15-year-old over 12-year time, how much debasement, how much has a game has changed, right? Like how much has investing changed, right? Because even when I got started, like single family homes made a lot of sense. Now it's just like duplex, now multiplex. It's like all these weird things kept changing. Things are still there. The opportunity is definitely still there. The rules and the amount of effort you have to put into it has changed, and it's increased, because unless you have the capital to kind of play the money game, you have to be like the active partner. You have to understand how all this is working. And then when I trying to figure it out, I'm like, the opportunities for investors now, you just have to figure it out. But I feel like there is some kind of deflationary pressure with all this AI stuff that's coming. Something's going to happen, right? So you just got to ride the wave, ride the trend, figure it out. And I just really hope people, have critical thinking and go do their due diligence on how to get ahead. Because I don't think everyone's wired this way like we are. I think we are the crazy ones. Yeah,
that's fair. I actually think it's one of the most fascinating times, because between what's happening with the financial system, the new financial rails being built out, and AI, it is like absolutely, to me, fascinating. It's exciting. Like I love seeing the latest stuff that's coming out. Like it's just because it's mind blowing. If you let yourself kind of start thinking about where that heads and the possibilities, it's mind blowing. I'm like, holy cow, this gets real fun real quick.
It's going to be very interesting. Like I was having this conversation with another parent, and I'm like, is school useful right now? Because like, I mean, your information will just be like asking AI. Because I think the thing I was kind of like, we've offloaded our thinking to AI. So I'm like, is my kid's brain going to be mush because like he's not thinking?
And there's already studies coming out saying if you're using it more, it doesn't trigger that it doesn't help. It's harmful that way.
Well, look how, social media was pitched to us, and now we know it's terrible for you, right?
Yeah.
I don't know what AI is going to be like. Is critical thinking just gone? Anyways,
whole other cover. It's great, though. Man. It's really cool talking to you. I appreciate you coming down. It's nice. Sure. I appreciate everything you shared and kind of what you're up to, Zen. You're doing awesome stuff, man, and you're getting rewarded for it. And you're seeing that people are resonating with you. So it's really cool, man. Keep it up. It's great. I think the more people that we have that are just share, like, really looking at data and looking deep at things and trying to be like, hey, look, let's try to figure this all out together. It helps everyone.
100%.
The rising tide lifts all boats, right? Yeah. So it's really cool, man. Thank you.
Thank you.